Pankaj Murarka is with us. He's our Market Master of the Day, CEO and Chief Investment Officer at Renaissance Investment Managers. Pankaj, good morning. Happy New Year. Great to have you with us on the program at CNBC-TV18. And it's always good to speak to you.
Morning, Prashant. Wish you a very happy New Year.
Thanks very much, Pankaj. So how are you feeling about 25? Optimistic, a little cautious? I was saying in the morning that despite, at 25, especially the last few months kind of soured returns a little bit. But, we're coming off a pretty good run, right? I mean, last three years or so have been pretty decent. Actually pretty good, especially if you look at individual stock returns. What's your sense as we begin this new year?
For a bull like me, it's always very difficult to be bearish on markets. But having said that, I think it's wise to start the year on a cautious note, because the fact remains is that while India is a high-growth economy, the fact is that we are the most expensive market in the world, and probably the economy is in the middle of a cyclical slowdown. So I think what I really think is probably this year is going to be a year of stock picking. We'll see a probably much more wider dispersion between sectors and stocks, and probably stock picking will make a difference. Probably at the index level, I think probably we'll have a slow start to this year, because I think last quarter's earnings were not so great, and our belief from whatever we have seen from our conversation with companies, probably this quarter we'll see some uptick in earnings, but that uptick will still be fairly modest probably. So I think our assessment is probably this year, as we start this year, first half of this year is going to be a slightly more gradual recovery in the economy, and probably we see recovery in the economy in the second half of the year. So the first half of this calendar year will be more benign in that sense. And I think stock picking will play a bigger role in terms of driving returns. And yet I still think that probably this year could be similar to last year in terms of aggregate returns, where index could do a high single-digit kind of returns, which is not bad in a matured bull market like the one we have, because we're already 5 years into this bull market.
Okay. Yeah, but we are also about 8% off the highs that we saw in September. Pankaj, good morning. And again, Happy New Year from me as well. I wanted to know, we all sang this theme of urban slowdown, consumption slowdown. But look at the way Avenue Supermart, V-Mart and all have reported the December sales numbers. Does it look like, at least in pockets, people have been able to beat the slowdown? Are you positive on retail itself?
We are positive on certain specific names in or companies in. I think some of these companies doing well is more about these companies having a very strong or excellent execution. But I think overall consumption is slow, meaning it's about 6 quarters now that we have a rural slowdown, where rural consumption has slowed down. And we've seen signs of urban has also slowed down in the last 2 quarters. We are seeing some pickup that has happened in the festival season, but that's very modest. Some of these companies, let's say like DMart doing well, I think is more about exceptional execution by these companies than more. I would not extend this trend to the sector or to the consumption overall at the aggregate level. So I still think
some FMCG companies actually told us rural recovery, when they spoke to us after the Q2 numbers. Some of them did speak that rural recovery, and they were all bemoaning urban slowdown, actually.
Yeah, Latha, but the thing is, we have to see it in context. The recovery from a very low base, and it's a very modest recovery. It's been about 6 quarters that from the time rural consumption started slowing down. So from a very low base, still the recovery you're seeing is low single-digit recovery in terms of volumes. Large part of recovery for these companies is in terms of value, because they've taken significant price hikes. So even in this quarter, when we look at the consumer numbers as we anticipate going forward, meaning most of these companies will report probably mid single digit kind of revenue growth, and within that also a significant part of that growth is coming from price hikes than volume growth in that sense. So the volume outlook or the recovery is still very benign or modest from a very low base. Meaning our view still is that probably we are in an investment driven cycle. So in this it has been the case in the last 3 years, and we believe over the next 5 years, India's growth will be led by investment. So investment-driven companies or sectors will actually outperform consumption, which is exactly opposite of what we had in a decade prior to COVID.
Okay. Hi, Pankaj. Good morning. Good to see you in. This is Nigel on this side. Pankaj, when we spoke, I think somewhere in September, October, I recall you telling us that I think you all had a fair bit of exposure to IT, and you all were quite positive in the medium term. Now that played out perfectly. Stocks like Infosys, I think Birlasoft, various other names that you all had, they have done quite well. How much of this good news is in the price? Because there are still some kind of headwinds, though the street is looking forward to a much better showing in FY26. So what's your current view on tech and what do you like from there? If you could name a few companies alone.
Morning, Nigel. You have a very sharp memory, I must say. So the view on IT still holds, Nigel. Yeah, probably. I think from a near-term perspective, the returns in IT have got front-loaded in that sense, and markets already pricing in FY26 earnings or valuations in that sense. But our view on IT is slightly more medium-term, where we think probably while we'll see in the over the next 3 quarters, we'll see a cyclical recovery in IT spend, but we still think that from a medium-term perspective, the growth will accelerate for IT. So yes, from the near-term perspective, the returns have got front-loaded, but we still like some of the large-cap names like Tech Mahindra and Infosys, and we like specific names in mid-caps like Persistent, Coforge, and some of the other small-cap names as well. So we continue to remain overweight on IT as a sector overall.
Okay. All right, Pankaj, we'll leave it there. Thank you very much for joining us, and here's to many more conversations through the course of the year in 2025. Appreciate it. Mark